Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
I've got a question about what are bundled mortgages and are they a good idea?
Okay, so bundle mortgages. I think this is in relationship to some of the news reports that have gone on lately, where they describe someone taking out a first and second mortgage with a bank, and the first mortgage, when you combine the two, there's some added risk for the bank that's lending. So that would be called a bundled mortgage. Now, what's really going on is there's some concern out there in the financial community, including the Office of the Superintendent of Financial Institutions here in Canada, that some of the second-tier mortgage lenders, non-prime mortgage lenders, have been going about bundling first and second mortgages into their mortgage-backed securities that they're selling. So the reason I think it's made a bit of a news lately is because that was a major influence in the American house price correction. So it didn't cause the correction to take place. It just meant once the correction started, the consequence of having mortgage-backed bundled products that include that are included in mortgage-backed securities means that there's added risk there that the person purchasing the mortgage-backed security may not be aware of. So this is really a warning to all of your investors out there, because I know there are a couple of second-tier lenders out in British Columbia, as there are here in Ontario, where they're counseling people to participate in them with their retirement funds. They offer a tremendous return, often in excess of 8%. There really was no risk in those loans over the last 10 years. They actually were a relatively safe financial investment, certainly a way better return than you would have gotten virtually anywhere else, including the ownership of real estate over a 10-year period. But as the housing market, the correction starts to head, they are also a very risky proposition to be involved in, certainly very risky if it's any of your retirement savings. So if you're participating in one of those programs right now, I would just recommend you talk to your accountant, talk to your financial advisor, have them give you an independent assessment on what your risk is, and if it's too risky, you should probably think about getting out.
Now, Ross, the real estate bubbles in BC and Ontario. What's the difference between BC and Ontario right now?
Okay, so as you know, and as your listeners know here, I've been focusing on your show for British Columbia, Vancouver mainly, because it exemplifies what's going to take place across the rest of your marketplace, and really haven't talked about Ontario a whole lot because Ontario really hasn't made a lot of news over the last 3 years or the last 2 years the way that Greater Vancouver did. You had all of the problems with the Real Estate Council of British Columbia, the illegal acts of registrants out in your province, the foreign buyers buying and the FINTRAC forms not being completed, predatory lending that's taken place, just over and over again, the series of circumstances that have taken place out there that have made headlines across the country. On top of some of those crazy house price gains that you've heard about being stated, where you're driving your property assessments up 50-60% for some homeowners in Vancouver. So what I mean by that in terms of the housing bubble, a good way for a consumer to look at a housing bubble is how much your housing prices have increased over the last 5 years. Now, 5 years ago, back in 2013, so I recorded this in 2012, but first went live with any intelligence outside of what I used to assist my own clients. I went live on Garth Turner's blog, and I told him that May 19th, specifically, was the day that the market died in Canada. And I also stated that that was the time when peak pricing had been reached. But what the mistake was I made back then is that I made the typical assumption mistake where the first three letters in the word assumption, I was made to look like that because I assumed everybody understood what I was talking about, and I had no idea the ignorance that existed on housing markets. So when I was speaking to Garth back then, when I said about it was peak engagement was reached back in May of 2013, what I meant was that the first-time buyers had reached their threshold. And I had said to him that that's when peak pricing was reached. Well, peak pricing is really defined in a couple of ways from my firm now, after first assuming everybody knew what I was talking about in 2013. First-time buyers reach a peak price where the average first-time buyer can no longer pay anymore to purchase a house. And when that happens, all of a sudden, the share of sales going to first-time buyers begins to decline because they simply cannot take on any additional mortgage debt to buy a more expensive property. In other words, the condominium they are looking at $300,000, they can still only pay $300,000 for that a year later because they have had no income increase to allow them to pay $310,000. So when we measure peak price back in 2013, the statement there was simply that was the maximum price that the average first-time buyer in Canada could afford to pay had been reached. And as a result of that, what I knew what would have happened, but which I assumed everyone else knew what would happen, first-time buyers' share of sales would begin to decrease. The sales chain would have to get shorter. There would be more sales taking place in one full sales chain, and that would begin to drive the average selling price as reported by organized real estate upwards. But back in 2013, I was still ignorant to the fact that CMHC, the banks, and everybody else actually believed that the average sale price myth, or the benchmark house price myth, or the HPI myth of the Terranet National Bank. I was ignorant to the fact that those people actually believed that to be true, when in fact it wasn't. So peak price was reached then, and that happened also out in British Columbia and in Ontario. So that's when the final cap of a housing bubble begins to form. And if something happens that bubble is just punctured and it is allowed to deflate, then a housing correction takes place. If that bubble is not popped and it continues to expand for whatever reason, then the bubble gets larger and larger and larger until it reaches a point where it has to pop, which is what happened in Vancouver. Now we get back to the housing bubble of Ontario versus British Columbia. With news headlines been focused on British Columbia now for 2 years, what nobody understands is that in Ontario, housing prices have increased, selling prices, have increased 42% from April of 2012 forward. While in British Columbia, they only increased 22%. So what that means is the size and the magnitude of the Ontario housing bubble was almost twice as large as it was in British Columbia when the British Columbia market began to correct and headed towards its full-fledged crash, which is what it's under right now. So all of those Ontarians and all those housing forecasters and all of those and CMHC's warnings, all of that was going down that got focused on British Columbia, ignored the fact that Ontario, as a province, had its home prices have now increased 42%. When CMHC issued its warnings, the difference was actually a 15% spread. So Ontario was in a far, far worse situation than British Columbia was at the same month when the CMHC released a warning for British Columbia, and it didn't release a similar one for the province of Ontario or the major markets in those two provinces. So the housing bubble in Ontario is substantially larger than it is or was a short 6 months ago in British Columbia. Well, I guess we're going a little further than that. We're 7 months now is where your house price peaked in British Columbia. So you are that far removed, and yet the Ontario bubble still is 41% while you're sitting at 21%. What that means is your prices can have the ability to fall all the way back to April of 2012 levels. And if they drop below that, then that's when you officially call a correction to be taking place, or excuse me, a crash to be taking place. And by all accounts, British Columbia as a province is headed in that direction right now. We as we told you before, we know that right now you're headed towards a $320 billion drop in your property values for homeowners in that province.
Is there a reason for the crash beyond the fact that prices just were unsustainable?
No, that is really the only reason there is ever a house price correction or crash. Normally a market has a cycle where the buyers that are out there in the marketplace right now, they have a set income. When you're in a certain part of the cycle, you're not going to see an increase in income because the cycle usually only lasts between 12 and 18 months before it goes into a new phase. This particular phase, in parts of Canada, like Ontario, are now into their fourth year. So we've never seen this before, where this part of the cycle has gone on this long. So the fact is that the selling price ability, the purchase price of the overall population, their spending ability in homes, it has not changed or increased in the last 4 years because wages have not gone up. We've already eaten up all of the differential caused by lowered interest rates over that period. And at the same time, we are now seeing interest rates rise during the last 3 months. So the sustainable price was actually set back in April of 2012 at the current income levels, the current equity to debt ratio, and everything beyond that time has been unsustainable. It inflates the myth of house price gain, which creates the illusion that allows any housing bubble to exist. So the housing bubble is just an illusion. Normally, it doesn't need to be popped to get deflated. It just happens through a natural deflation over an 12 to 18 month period. But at this stage, that's simply impossible. It cannot deflate. It has to pop because the current run has lasted almost 4 years.
Can people bring down real estate prices if everybody just refuses to buy over the next 5 or 6 months?
Well, that's a great question. If you go back on your show, probably a year ago, when Operation Code Red, when Code Red was launching out in British Columbia, I had given advice to all millennials in British Columbia: if you want to get housing affordability back in check, first-time buyers only need to quit buying. That's all that needs to take place. What's happened is that from April of 2012 forward, as first-time buyers' share of the market has slowly shrunken each and every month, until it gets to a point like it did in Vancouver, and which then flows into British Columbia, where there are not enough first-time buyers entering the market. All of a sudden your market has to correct because the sales chain is no longer sustainable. There are simply not enough first-time buyers starting the chain off. The easiest way for millennials to get housing affordability back in check for themselves is simply, as an en masse, don't buy a house. Wait a year, and you will see housing prices plummet, and that benefits the millennial first-time buyer because they can buy at a lower rate. And even though a lot of people feel hurt by the net wealth that evaporates in a house price bubble when it pops, as Vancouver or British Columbia is undergoing right now, you're heading towards $750 billion loss in net worth. The fact of the matter is that equity in those homes, that wealth, is never really available until you sell your final home. So that wealth really, higher house prices harm you until the very last day you want to be a homeowner. And then only on that very last day do you really benefit from higher house prices. Throughout the 40 years or so that from when the first-time buyer buys their house till they finally are old enough that they want to sell their last home and move into a retirement community or something of that nature, during that 40-year period, higher house prices financially damage those very same homeowners. There's way more benefit to lower housing prices for everything, the economy, the investment structure, the TSX, everything benefits from lower housing prices other than the housing market. The only part of the economy that benefits from higher home prices is the new home construction market, because they can afford to build more and more expensive homes, and the consumers have the ability to buy them because their own home has gone up in value. That's why you see the New Home Builders Association acting as a shill or a huckster, making false statements about how, this is going to improve affordability by us being able to build an extra few houses, the supply and demand myth. It's just a bunch of hogwash. There is no statistical evidence or any academic study that ever has proven that to be true, because there never will be. It's a falsehood. It's way better for people to benefit from low house prices over the course of their lifetime versus high house prices on the day they finally sell their last home. You can take all of the extra money that you didn't spend by owning a more expensive house caused by house price inflation, and if you had just simply taken that money and invested it somewhere else. So there is no real loss. The only loss is to the building industry. And the consequence is to the entire economy, because the entire economy suffers when everything is weighted towards home ownership, when so much equity and so much debt is incurred simply to own a home. There's where the problem you have for the entire economy of a nation.
We'll have more with Ross Kay right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, people like to list their stuff and take a look at listing syndications. What is that, and is it a good idea?
So listing syndication, that's another great topic, and it's something that you're only going to hear one independent view anywhere you look today, and that's going to be coming from this show or any printed materials that my firm has released. I am an expert on listing syndication because I fought it for about 3 years with the Canadian Real Estate Association. I fought it because I knew the risk that it placed homeowners in. And I was concerned that if the industry en masse accepted listing syndication, my own clients I would be constantly fighting with them to explain to them why they should never allow their home to be syndicated. What listing syndication means is that when you list a property, your MLS details appear on Realtor.ca. Through listing syndication, we have a couple of options here in Canada, one run by the Canadian Real Estate Association, which is the one that I fought. That one allows your listing to be on tens of thousands or hundreds of thousands of websites across Canada, which is called a reciprocity. In other words, Joe will allow you to advertise his listing on your real estate website if you in turn allow Joe to advertise your listing on his website. So it's a reciprocal agreement. It's a reciprocal agreement created exclusively for the businesses of the real estate agent. It has no benefit in Canada at all for the homeowners trying to sell their homes. What I mean by that is this. Only in Canada is there a real estate website called Realtor.ca where 99% of all houses listed for sale with real estate agents, brokers, salespeople, appear on the same website. This is the only country in the world where any Canadian can go to one website and see every single house that's listed for sale. Now, up until a couple of years ago, you couldn't see private for sales on Realtor.ca. But the Canadian Real Estate Association changed their rules a couple of years ago, which effectively allowed firms like Comfrey, Property Guys, the private for sale companies, or mere posting companies, is what some of the alternatives are called out in British Columbia, to have their listings, their private for sale listings, appear on Realtor.ca as well. So not only did it have 99% of all regular agent listings, now it's also got for sale by owners. There is no other country in the world where you can even find 55% of all of the listings on a single website. And Canadians don't understand this. This is the only place in the world where that has ever happened. And it was a result of Canadian always being technology leaders. It was a result of the franchise real estate systems in Canada wanting to gain some control. And it was just the fact that the MLS systems, the regional MLS systems, like the Real Estate Board of Greater Vancouver, the Toronto Real Estate Board, they had already had their own technology in place to allow websites to be created. A consumer, when you allow your home to be syndicated as a listing, in other words, spread out around thousands of real estate websites in Canada, you lose total control of everything associated with selling your home. Now remember, you already have the #1 website in the world where every single Canadian goes when they're looking for homes. So why would you have a need to be on any other website? Maybe you want to be on the agent's website that you've listed your property with because they want to add a few added features on the internet about the property. Okay, so now we have 2 websites in Canada that you should be on, but you should only be on 2. You shouldn't be on tens of thousands or hundreds of thousands of websites, as some people are today. You certainly don't, if you're listed with a RE/MAX agent, you certainly don't want to have your listing be on royallepage.ca, because royallepage.ca is trying to sell Royal LePage listings. They are not trying to sell your listing. You certainly don't want your property to appear on Zolo.ca, because Zolo Brokerage has no interest in selling your property. Zolo Brokerage only wants to get other people to list their homes with Zolo, and they're going to use your property for that purpose. Listing syndication means, in British Columbia, if you have a $2.8 million home listed for sale in Greater Vancouver, and it appears on the Zolo.ca website owned by Zolo Brokerage, simply another real estate agent, your home, beside your home, is going to be a chart showing you how housing prices are falling. What consumer would want to sell an asset worth hundreds or millions of dollars, and right beside the advertisement for their property, there's a chart telling the potential buyers that the value of that home is dropping each day? It's the most asinine thing that I have ever heard. It's crazy, because the only people to benefit from this are the real estate agents themselves. And that's why it was created in the first place. The problem is, no one wants to tell the consumer that's what's going on. They want to pretend that IDX sites, which is where brokerages share their listings on the same real estate board, or the DDF, the Data Distribution Facility, created by the Canadian Real Estate Association, which allowed me as a realtor in Burlington to have listings, every single listing posted to the Real Estate Board of Greater Vancouver on my own website. It's just nuts. It's crazy. Now imagine you sell your house and it's been syndicated across tens or hundreds of thousands of websites here in Ontario. Because you got to remember, as a realtor, I was allowed to own 7 of my own personal syndication sites. So if you take 115,000 times 7, you have almost 1 million websites in Canada that could be created where your listing appears. You have to know what's on every single one of those websites, what it's saying about your house. Did it leave out a key word that was included in the listing by mistake? Was there a pricing error on hundreds or tens of thousands of websites, because tens of thousands of agents all use the same listing syndication service, and when your listing was uploaded, that mistake happened and no one knew about it? What happens if the buyer of your home saw your house on one of those other websites, noticed the mistake, bought it, and then later comes back and sues you for false advertising? Because I'll tell you, they will win that case. You will have to sue your realtor to get your money refunded that the buyer wins from you in an award. That's why no one should syndicate their listings. If any of your listeners have their property listed for sale and it's currently on CREA's DDF or the IDX, probably they're not even going to know about it, because the agents aren't trained enough even to be able to explain to you what I just explained to you. They should immediately call the Privacy Commissioner of Canada or British Columbia, and they should find out what the Privacy Commissioner has to say about that. Because of those tens of thousands or hundreds of thousands of websites, how much of their personal privacy information is being scraped from those websites? Who's monitoring tens of or hundreds of thousands of websites to be sure that there's no scraping being done? The Canadian Real Estate Association will tell you, don't worry, one of the conditions is the agents have to watch and make sure that your listings aren't being scraped. Good luck. Real estate agents don't even know how to create a web page on their own, let alone market properly, let alone track every single place their listing is. It is impossible. Because it's impossible, you should never allow your home to be syndicated. There is no need in Canada for your listing to appear anywhere other than realtor.ca and on the agent's website, personal website, who you have chosen to market your property. Those are the only two places your listing should appear. Certainly Google will tell you the only two places your listing should appear are those two websites. Because if you allow your house to be placed anywhere else, the hope that anyone will go to the correct websites that you want them to go to when they're looking for your home is nil. Listing syndication makes that impossible. Even realtor.ca does not pull up in the first page search on any of the listings that appear on it. Because all of the third parties out there doing these syndication sites, all they're doing is manipulating the Google search engine terms to make it work for them. Long, complicated answer, Jim. What it means is, if anyone is currently thinking about listing their house for sale, has their house for sale, they don't understand what I'm talking about, drop me an email and I'll give them a response.
And what's your email?
They can send that one to rossk@rossk.com. They don't even have to go through the Wealthy Homeowner site for that one.
Ross, thanks a lot for chatting with us.
Thanks a lot, Jim.
My guest has been real estate consultant Ross Kay from the wealthyhomeowner.ca. You're listening to HoweStreet.com radio. Find us on Twitter at Talk Digital Net, on YouTube, we're Talk Digital Network. Questions for the show can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.